Imagine sitting at your desk, opening your banking app, and realizing that your investments made more money overnight than you did at work yesterday. Not because you discovered a secret Wall Street trick, but simply because for years you quietly invested one small, boring amount of money every month. Now imagine the amount that started that whole process was just $100 per month. Roughly the price of a few restaurant meals, a couple streaming subscriptions, or that mysterious pile of small online purchases we all swear we didn't make. But here's where the math gets interesting. If you commit to that $100 monthly habit for 30 years, is it just a nice little savings habit? Or could it turn into something life-changing? Let's start by putting that number into perspective. $100 per month sounds small, especially in a world where headlines constantly talk about millionaires, billionaires, and people buying islands like they're ordering pizza. But investing is less about dramatic moments and more about quiet consistency. If you invest $100 every month for 30 years, you would contribute a total of $36,000. That's it, $36,000 over 3 decades. At first glance, that doesn't exactly scream financial empire. But here's where things get interesting, because investing is not just about the money you put in. It's about what happens to that money over time. If those monthly investments earned an average return of about 7% per year, which is roughly in line with long-term stock market averages, that $36,000 could grow to around $120,000 after 30 years. Suddenly, that small monthly habit looks a lot more impressive. And if the average return were closer to 10%, which has historically happened during strong periods, the final amount could reach well over $200,000. Now, before anyone starts planning a yacht purchase, let's be honest. $200,000 is not retire on a private island money, but it is absolutely life-changing money for something that started as a simple monthly habit. It could help pay off a home, boost retirement savings, or give you a financial safety cushion that most people would love to have. The funny thing about investing, though, is that the journey rarely feels exciting while it's happening. In fact, most of the time, it feels painfully boring. There's a phase many investors call the boring middle, and it deserves its name. During the first several years, your investment account grows very slowly. You check the balance, maybe once a month, maybe once a week, and it looks like the financial equivalent of watching grass grow. Technically, something is happening, but it's not exactly thrilling. This is where many people lose patience. They think, I've been investing for years and nothing is really happening. But investing works a little bit like planting a tree. The early years are mostly roots growing underground. You don't see much above the surface. Then, suddenly one day, the tree starts shooting upward, and everyone assumes it happened overnight. In reality, the groundwork was happening quietly for years. Another interesting thing happens after enough time passes. At some point, your investments start earning more money per year than you are actually contributing. Imagine you're still investing your regular $100 per month, which adds up to $1,200 per year. Eventually, your portfolio might grow by $1,500 in a year, then $3,000, then even more. That's the moment when your money slowly begins to feel like it has a job of its own. It's no longer just sitting there politely waiting for instructions. It's out there doing financial push-ups while you're sleeping. And by the way, if you enjoy simple explanations about money, investing, and building wealth without the confusing jargon, consider subscribing to the channel. It helps the channel grow, which means I can keep making more of these videos instead of pursuing my backup career of professionally overthinking what to eat for dinner. Now let's talk about something surprisingly important: small habits. One of the reasons $100 per month can work so well is that it's small enough to be sustainable. Huge financial plans often fail because they require heroic levels of discipline. People say they will invest $1,000 per month starting next year, and next year arrives with bills, vacations, and a suspicious number of online shopping boxes. But $100 is manageable. It's the kind of amount you can automate. You set up an automatic transfer, it happens quietly every month, and eventually you almost forget it's there. Your investment strategy becomes less about motivation and more about routine, which is exactly where long-term success usually lives. Another fascinating aspect of investing is how dramatically the outcome changes if the monthly amount increases even a little. Suppose instead of $100, someone invests $300 per month for the same 30 years. With similar returns, that final number might land somewhere around $360,000 or more. Suddenly, the story changes quite a bit. And if someone manages to invest $500 per month over a long period, the result could move well above $500,000 depending on market performance. The point isn't that everyone must invest huge amounts right away. The point is that starting small creates the foundation, and many people gradually increase their contributions as their income grows. Of course, nobody knows exactly what the next 30 years will look like. Markets will rise, fall, recover, surprise everyone, and occasionally behave like a dramatic reality television show. But historically, broad diversified investments have rewarded patience over long periods. And while the math is impressive, the real secret isn't just in the numbers. It's in the way your mindset begins to shift. There is something surprisingly powerful about the psychological side of starting early, even with small amounts. When you begin investing, you start thinking differently about money. You start noticing opportunities to save small amounts that can be invested. A few dollars here, a few dollars there, and suddenly your future self is quietly building a financial army, one soldier at a time. Speaking of future versions of yourself, imagine meeting the person you will be 30 years from now. The future version of you walks into the room, looks around, and says, "Thank you for starting when you did." Not because the journey was glamorous, but because the simple habit of investing turned time into an ally. That future version of you doesn't care that the first contributions were small. They care that the process started. But if starting is so important, why do so many of us hesitate? Well, it's because one of the biggest myths in the world of investing is that you need to begin with large amounts of money. In reality, the bigger challenge is simply beginning at all. Many people wait for the perfect moment, the perfect salary, or the perfect market conditions. Unfortunately, the perfect moment is a bit like a unicorn riding a skateboard. People talk about it a lot, but sightings are extremely rare. So, what happens if you invest $100 per month for 30 years? You probably won't become an overnight billionaire. You probably won't be featured in a dramatic movie about finance. But you'll probably end up with a nice amount of money just from a small habit that seemed like no big deal at the start.